Happy Friday. Fry-yay. Hey, everybody, it's Lisa Copeland. Long time no talk to. I feel like I haven't been on for a while, but I've got something really big to talk about today. So I wanted to jump on. So many of you know, 20 years ago in January, I founded a little company called Austin Mortgage Associates. And we were really small back then, and I was really excited. It was January of 2000 just to be an entrepreneur. And what a ride it's been for the last 20 years. So I ran the company for almost 11 years as the CEO, and I jumped out for a time so that I could go back into the automotive industry. And I'm going to pull up here because I do want to grab y'all's questions. Hold on one second. Anyways, so that I could go back into the automotive industry, and the mortgage industry allowed me to do that. So long story short, sold my dealership in 2016 and been out speaking and Cars Her Way and all of that. But I've had my hand pretty heavy in the mortgage business over the last, hey, Subaru Steve Montgomery, for the last 4 years. And so I want to talk about today the effects of the coronavirus and on the mortgage and financial industry. So my position in the company has been, for the last 4 years, is I've been the chief marketing officer, chief information officer, and of course, the co-founder of the company. Hey, Melissa Burrow. I've not been out originating loans, as I've been continuing to work diligently in the automotive industry, helping dealers sell cars to women. But it's required me to come back full time at a very, very heavy level. I'm still doing everything else, and I'm back on the road next week speaking. But as the chief information officer, it has been absolute insanity over the last couple of weeks. And so I wanted to kind of I wanted to explain to people, I wanted to have something that broadcasts out on all of our pages, including Austin Mortgages, so I could answer some of the questions that I have been receiving in emails from our clients, our past clients, friends of mine, friends from around the country. We are licensed nationwide, but we really prefer just to do loans in Texas. But I want to help my friends across the nation, all my friends in the automotive industry. So I've got a bunch of questions here that have been kind of the overriding questions that have been asked to me. And then I'm going to take y'all's questions afterwards. So if I do not jump on, or if I don't acknowledge you yet, I will at the end. Okay. Excuse me. So let's put some things into perspective. And David Cribbs, thank you for sharing. And if you think this is important, if you want to share this out, so your friends around the country, I'm not doing this so that you'll do business with us. If you live in town or you live in Texas, I'd love for you to, but I want you to be an informed consumer, because y'all, what's going to happen is all of these fly-by-night companies are going to start popping up. And the big call 1-800 companies, they're going to start hiring temps to start trying to shove their pipeline full of loans, and you're going to get screwed. You will. And again, I'm not saying, we have a lot to say grace over right now. My husband walked in the door at 11 o'clock last night. So we got plenty to say grace over. We'll always take more. We're ramping up also, but this is not to tell you to do business with us. This is for me to give you information so that when you're out there, my friends from around the country, I see so many of you on there. Lisa, are you licensed in Florida or Illinois? No, we're not. We actually hold a nationwide license, but we only practice in Texas. But I'm going to give you guys some advice on what to do if it's nothing that we can do for you. And again, this is not for that reason, because just the thought, I think right now, of us throwing a bunch of more loans on our pipeline is enough to make my whole staff jump off a boat. But anyways, that being said, let's start from the beginning. Let's talk about the coronavirus. Now, yesterday, I was on webinars and on calls all day long with Fannie Mae, Freddie Mac investors, some of the top people in the mortgage industry and in the real estate industry, talking about what the realistic effects are and how do we set realistic expectations for the consumers. Whether you're my consumer, Austin Mortgages, or you're a consumer out there, if you're watching this show, you're a friend or a follower of mine, and I want to make sure you've got the best information possible, because I want you to be able to capitalize on this. Now, I can tell y'all, I have not seen a frenzy personally like this since right after 9/11. And after 9/11, we did close to $100 million in mortgage originations. Our company did in about a 2-month period. It was absolute insanity on steroids. And I think that we're going to see it again. But okay, so let's get a little bit of perspective. As of today, now we are a country of 300 million people, citizens, right? As of today, there's 250 confirmed cases of the coronavirus and 14 people dead. Now, to put that into a little bit more perspective, the flu has affected 26 million people in just 4 months, and killing 25,000 so far. Okay. Now, those numbers are staggering. But those numbers, again, if you're just now tuning in, it's Lisa Copeland. I'm talking about the effects of the coronavirus in both the mortgage and the financial markets. I've just been an overload on it as serving as the I'm not the chief financial officer, I'm the chief information officer and the co-founder of Austin Mortgage Associates, which was founded by me and my husband in January of 2000. So we have been playing this game for 20 years. I've seen it all. I have seen it all. And I'm telling you, this is not quite yet to the hysteria level that 9/11 was, after 9/11 and mortgage rates dropping. Anyways, that being said, I'm getting to my notes because I want to give you guys exact dates. But on Tuesday, the Feds dropped, the Feds cut the prime rate a 0.5 point. And so here is one of the questions that we have gotten from every human on planet Earth, whether I'm getting Facebook messages, texts, calls, emails, whatever. Does the Fed prime rate cut, does that affect mortgage rates? And the answer to that, the big answer is no. No. Now, the Feds cut the prime rate because consumer spending is responsible for 75% of the U.S. economy. That means, we're out spending and we're buying and we're doing. And if for some reason that starts to retract, that will throw our country into a recession. Okay. So the Feds knee jerked and cut a 0.5 point. Okay. I mean, the president didn't even know that they were going to be doing it. So the Feds cut the benchmark rate on Tuesday, which they haven't done since the financial crisis of 2008. Nobody saw it coming. None of it. Oh, Vicki, thank you, love. So the hope is that lower rates will stimulate refinancing and more home shoppers. So let's talk about that. I live in Austin, Texas. Oh God, Surrey is talking to me. Okay, shut up, Surrey. I guess I could take these out. That would help. So what is happening is that home buyers or homeowners, I can speak to my market, Central Texas. They're not putting their homes up for sale. Right. And one of the reasons they're not doing it is because they're like, I have a 3.25% interest rate. I've got 3.6, somewhere under 4. And their fear is that they couldn't move up and find a new house and do whatever because they would be sacrificing the lower rate that they have on their current home. So that has put us in Austin, Texas, in Central Texas, in a complete housing shortage, meaning we don't have enough homes for, it becomes supply and demand. So what has it done to the supply in Austin? The supply is low, the demand is high, and the appreciation, like my house is going up 15% a year, compound. Boom, 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 boom. Insanity, right? Is it really worth that much more? Houses are worth what the market will bear. Let's be real. So one of the things that we believe that this what I would call coronavirus financial, whatever it is, it's going to spur people putting their houses on the market because they know they're going to be able to replace it with something newer and bigger for, number one, less money. And they're going to be able to replace that lower interest rate that they had in the first place. And remember, guys and gals, I'm going to get to your questions after this because we're recording this out on all of our stuff. So the Feds have not made a cut like that since the financial markets of 2008. So you think, okay, well, that's great. Will the lower rates stimulate, the economy? Yes and no. Everything's a yes and no question when it comes to this. The Fed doesn't set mortgage rates, but whatever it does, it influences them. So when you see a 0.5 point cut to the Fed rate, that does not mean interest rates went down 0.5%, because the Fed rate and the mortgage-backed securities are two totally different indexes. But one does affect the other, but not always for the good. So the decision to cut the Fed fund rate unnerved the investors who left the safety of long-term government bonds. I made myself really good notes off of all of these seminars and all these webinars I was on yesterday. So the bond market rallied Okay, so basically, the stock market does not like anything. If you go out and you say, okay, there is the possibility of a worldwide pandemic that is, and I will tell you guys and gals, it isn't that the stock market's worried that we're all going to die. That's not it at all. They're worried about oil. Oil stocks absolutely took a tank. That's one of the things that tanked the stock market because of travel and because of travel bans, right? And so that's very scary to the markets. Think about manufacturing. I just went and bought a new iPhone 11. Kind of love it, won't lie. So I just went and bought a new iPhone 11. And the guy says it's a good thing you're getting it today because we have, nationwide, we have about a 60-day supply. And if this coronavirus continues, Apple's not going to have iPhones to sell. They're not going to have the new iPhone 11 because they're not going to have anybody there to build them because the people are quarantined or they're sick or whatever, because so much is done in China, y'all. So much is done in China. Okay, I'm going to jump over to some questions because I got so much information. Lisa Johnson says exactly same in North Carolina. Thank you, David Cribbs, for sharing. But throw up some of your questions. So so here are some of the questions we're getting, and I'm going to answer them for you. I even wrote them out so I'd answer them correctly. Which stocks were most affected by what's happening in the last week? All right. The short answer is all of them. But the majority were, but the oil industry plummeted, as did a lot of the manufacturing with China and a lot of the deliveries being halted, right? It's pretty crazy. Another question people are asking me is like, Lisa, how does this affect me? Like, I'm just one person sitting here in Daytona, or one person sitting here in Austin, Texas. How does this personally affect me? And here's an interesting stat we got yesterday from an economist. Did you know that only 10% of people, 10% of us, even if we've got 401ks and all kinds of things, 10% of the people in this country own 80% of the stocks. So what does that really mean to all of us, right? We see that we're on TV and the stock market's plummeting and what's happening and blah, blah, blah. It's really, really only affecting the uber rich. It really is. Does it affect us a little bit? Are we going to see a little bit of, up and down and this and that in our 401k? Sure. But is it going to change our life or what we're doing? No. Don't panic, because whatever goes down will come up and whatever comes up will go down. So the wealthiest are truly the ones that are the most affected. Now, I might have some billionaires on this today. There might be some billionaires out there, but I'm not one of them. So I looked at ours and I think we were down 3%. Okay. It sucks, but it's not the end of the world. So, people are asking us, what's going to happen with interest rates? What's going to happen with interest rates? What are we going to do? And I wish I had my crystal ball. It's somewhere around here. And if I could look at my crystal ball, I would tell y'all. But all I can tell you is from 20 years of experience and us being very, very tied into Fannie Mae and Freddie Mac, and with the investors that we sell to this day over $600 million worth of loans to. And but here's interesting. The other day, mortgage rates tumbled to their lowest level in the history of Freddie Mac. And Freddie Mac was established in 1971 because they go out and they survey mortgage lenders to find out what the current average rate is. And you guys might see it weekly or daily or whatever. And it did tumble to the lowest since the formation of Freddie Mac in 1971. So is now the time, if you're out there, and I don't care where you live, because again, I may or may not do your loan, but I want to give you good information. Yes, I would not recommend that today may be the day to lock a loan if you're refinancing. If you're purchasing, you need to get your loans in, you need to get them locked, you need to get them into underwriting, you need to be able to, deliver on a particular closing date. But if you're out there and you could save, so think about one of the greatest economic stimulus packages could be, if you could save $200 to $300 a month on your mortgage, or maybe you shorten the term from 30 years to 20 years and have the same payment, because that'll happen on a lower rate. You can go from a 30-year, which is, 360 payments, to a 20-year, which would be 240 payments. So imagine knocking off that many payments, 120 payments. Imagine going from a 30-year to a 15-year where you cut it in half. So you're not making the bank rich, right? So there's a lot of reasons to refinance, and it may not be just to get the lower rate. It may not be just to get the lower payment. because I am about equity. I'm about building wealth in real estate. And many of you who know me know that we're out, my husband and I, and we're out buying land and we're acquiring stuff because we know that all true wealth is going to happen in real estate in the next 10 years. You know, we're very blessed, y'all. I don't care where you live. I know my good friend David Cribbs jump out here and jump in on this. No matter where you live, the way, you know, stock markets go up and they go down and all of that happens. But if you own real estate, if you can get into real estate or pay off the one you've got or pay it off sooner or borrow money to go buy investment properties, you will build generational wealth. You will build true wealth with a real estate portfolio. You just will. That's the name of the game. So the question is, should I refinance? Yes, most likely you should refinance. I would recommend to all of you out there, no matter where you are in the country, number one, go local. Go find somebody local, okay? Somebody who has been in business more than 5 minutes, because just after 9/11, the same thing happened. All these mortgage brokers popped up and, oh my God, they were everywhere, right? And they hire a bunch of people who think, okay, I'm going to go get rich and I'm going to go get a mortgage loan officer's license. They're idiots. They are idiots. And the way it has gotten so tough in our business from a regulatory standpoint, from a processing standpoint, that you want to deal with an expert. If whoever you deal with out there, y'all, I don't care what part of the country you're in. Number one, stay away from Rocket Mortgage and 1-800 because you're just a number. They're out trying to hire people right now who have never been in the mortgage business before to start, because we are about to get, we're not even just, we are slammed. We are slammed. This is why, you know, I'm back in the game, because, you know, we're slammed. Everybody is slammed. So stay away from a new company. Stay away. You know, when you talk to the person who's looking to do your loan, be like, how long have you done this? And if they don't tell you a minimum of 10 years, because that's when all the regs really started to change, be done. Be done. Find people that have been in this business 10, 15, 20 years who understand how to manage a pipeline like the ones that we're building right now, who understand the secondary markets and what drives them, and can give you solid advice. Because you know what? You all are not expected to know that. If you're not in the industry, you're not expected to know it. But you're hiring a company to handle your largest transaction. And you need to ask a lot of questions, because anybody can put the lowest rate out there. Okay, they can write anything they want in the newspaper. They can advertise anything they want to, but if they cannot get your loan to the closing table, if they cannot close it and fund it, and I'm telling y'all, we saw this after 9/11. I mean, so many people had loans in the pipeline and they had great expectations, and the loans never closed because the market went the other way. They dealt with ignorant companies who were just pop-up fly-by-nights because they wanted to come in. I'm going to tell y'all too, do not deal with out-of-state companies. If you're in Florida, deal with a Florida mortgage broker. If you're in Texas, deal with a Texas mortgage broker. Yes, we are for hire. If you're in California, you deal with a California mortgage broker. Okay, and broker, why? Because we can shop your loan. We can shop your loan. We can get you the best deal, right? But you go check them out. You go see how long they've been in business. You go look at their Better Business Bureau. You go look at their Yelp. You go look at their Google. And if they are not good, they are not good, and you will be screwed, and you will miss what is said to be the largest. Well, it isn't said to be. I mean, Freddie Mac came out and said it. Freddie has come out and said this is the largest rate drop of all mortgage companies surveyed since 1971. Okay, so that means, you know, all the historic low rates you've heard for the last 12 years, because that's jargon in the industry. Today, it's true. Today, it's true. So how would it change your life or your financial career or whatever it is if you could go from a 30-year mortgage, right? And what if you could cut 120 years off your mortgage? Let's just say your principal and interest is $1,000 a month. Let's just do some easy math today. That's $120,000 that you would save 10 years early on getting that loan paid off. If everybody out there isn't just doing it to go from a 30 to a 20, okay, which is what we really, really don't like to refi from a 30 to a 30. That's just not the advice that my team gives people, because we don't feel like we're serving their financial needs the best. And we do take an oath. And I've been licensed. I mean, I hold many licenses. I've been licensed, my husband, everybody. And our oath is to deliver the best financial results. And the best financial results is, do not let somebody talk you into going from a 30 to a 30 without at least discussing going to a 20-year mortgage. Now, you, the client, the customer, can decide. You might go, no, I'd rather take the $400 a month payment drop between the 30 and, going 30 to 30. That's great. That's your decision. It's your life. But have somebody present to you the 20-year option. Now, a 15 to a 30, there's some payment difference there. But a 30 to a 20 with interest rates dropping is a smoking deal. Even if you have the same payment as you had before, you're dropping 120 payments off of your loan. You're building equity faster. And what does that mean to you? It gives you options. You want to go sell that house. You want to, cash it out someday to pay off debt, whatever it may be, right? True wealth in the year 2020 is going to be built in real estate. You might have extra money. You can go buy that new car. Whoop, whoop. Go out and check out our dealers on Cars Her Way. That's my little commercial. But all kinds of things can happen. But you have got an opportunity today. Again, most of you don't even live around here. But I'm telling y'all, you can email me. You can text me. You can call me. I'll look at your deals. And I'll tell you if you're getting screwed or not, because you guys know how I am. This is my tribe. Y'all are my people. I'm going to answer some more questions here. The movement of long-term bonds, particularly the 10-year treasury, tends to be one of the biggest indicators of where mortgage rates are heading. All right. And what happened on Tuesday was the 10-year treasury fell below 1% for the first time in history. Wow. So can I sit here and look at it in a ball and say, here's what's going to happen, and this is for sure? No. But we're all smart enough to know. And that's why I just wanted to kind of concise the information to all of you today. I'm not discounting anything about the coronavirus. I'm not an expert. I'm not a medical expert. I don't claim to be. I am a financial expert, and I have been for 20 plus years. Every business I've run or had, there's a huge finance component behind it. And, but I am an expert when it comes to finances and financial information, and all of the indicators are here. I can't guarantee you rates are going to hit 2%. I can't guarantee they're going to hit 2.5%. But what I can tell you are what the facts are, and that Freddie Mac has come out and said that this is the lowest since 1971 per their survey, right? Let's get all the words in there, per their survey. So Terry asks, what equity do you need to be at not to have PMI for a 15-year conventional loan? Great question, Terry. 80%. So if you've got 20% equity, whether you're on a 15, a 30, or a 20, you can also drop your private mortgage insurance. And here's a good story. So our daughter, I hope she doesn't get mad at me saying this, she bought a house maybe a couple years ago. She built an amazing swimming pool, and so it added a lot of value to the house. And she could definitely drop her private mortgage insurance. So she called her dad, like she always does, and she said, "Dad, should I refinance?" And my husband said, "No, why don't you just get your PMI dropped?" And and this is before what happened on Tuesday. So Wells Fargo, and I'm going to call them out because they suck. Wells Fargo was the servicer of the loan. And she goes to Wells Fargo. They won't help her. They're like, "We'll send you a packet. We'll let you know, blah, 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 blah." Long story short, they're not helping her drop her PMI. And of course, her father and I have run the numbers. We know she's got a lot of equity in her home, and the PMI should be dropped, but she's got to go through this whole thing. The packet will be there in 10 days, they told her, and then you can fill it out. Then you can send it back in. And oh my God, sweet Jesus. It's like, no, Alex, you're just going to refinance the house. We gave the lender the chance to create a remedy, but they're not going to, because they're too busy. They're too busy hiring people for $15 an hour to take loan apps that, guys and gals, they're going to sit there. They will never get to closing. I'm telling you, 99% of the people that are watching this will not be doing business with us for whatever reason. You don't live by us, you're not in Texas, whatever. But I'm telling you, stay away from the big banks. They are terrible. Go and find the local mortgage broker in your town who has been in business a minimum of 10 years, a minimum. If they've not been in business 10 years, forget about them. Forget about them. They're amateurs. Okay. They're amateurs. They're, they haven't played the markets. They haven't played the big refinance games like we have, brought all the deals to closing. I am proud to say we never lost one out of our pipeline because it was our fault ever during these booms, ever. Okay. I mean, I'll process loans. James will process loan, whatever it takes. We know what to do, but be very, very careful who you have conversations with. You're going to start seeing all kinds of fake news, advertising. You can get 2%. No, you can't. No, you can't. Okay. You can't. So send me your stuff. You guys know I love you all and I will help you. So Terry, I hope that answered your question. James, hey, how are you? Oh, thanks, Vicki. You were so sweet. And so what kind of questions do you guys have out there? I wrote down a bunch of them because there's so many of them coming at us right now that James is just like, Lisa, if you could just answer all the emails that we're getting. I mean, when you close $600 million in residential, you've got, a couple thousand clients. So it's coming at us pretty hard and pretty strong right now, which we're grateful for. And, and I'm not going to tell everybody to refinance. What would be a reason that you wouldn't refinance? Number one, you owe less than $100,000 on your property. Don't do it. Because there are costs to refinance. You've got to buy title and there's lender's fees, not our fees. That's one of our business models. We don't have broker fees, but there are true lender's fees and there's a lot of costs associated with a refinance. So if you owe less than $100,000, I wouldn't do it. Chances are it's probably not a good deal for you. Let's see, what would be some of the other reasons to refinance? Okay, so not to refinance, it's less than you owe less than $100,000. You can't save more than, I would say $150 a month. That's kind of a bench, unless of course, you're going from a 30 to a 20. That makes so much sense, y'all. So if you could go in and your payment is now $1,000 at 30 years and you could move it to $1,000 at 20 years, do it. Because the long-term savings is $120,000 plus. Okay. So there's that. And if you're on a 20-year loan, then you build equity much quicker. So like if you were to look at the graphs and the charts of what you owe, and that gives you freedom. Maybe you want to sell your house. Maybe you want to upgrade. Maybe you want to downgrade, whatever it may be. But the more your house is worth, and the less you owe, the more freedom you've got, right? Maybe you want to send your kids to college. I had a customer and friend over at the house the other night, and she and I talked about it. And she said, we owe $14,000 on our house. And I was like, oh my gosh, wow. Why? And she said, because I planned my mortgage around my daughter going to college because her daughter's a senior this year. And she said, I didn't want to have a mortgage payment because I knew I would need to support her in college. I mean, perfect plan, right? And so now what does this person want to do? They want to buy more property and invest because now they can, because they've got, so, your mortgage is not just a mortgage, y'all. It is a strategy. It is a strategy for long-term wealth. There's going to be, if you've got kids out there right now that are renting, we can show them again. You may not be in our market, but I will tell you, they can buy a home now with these lower interest rates, cheaper than leasing or renting in a market like Austin, Texas. Now, are they going to be living in a sexy downtown condo? I hope J.T. Copeland, you're watching this. No, probably not. But you've got to get them into the mode of building wealth and building equity. The tax laws up to $500,000, as long as you've occupied the property for 2 years, $500,000 of that equity you can take tax free. Now, I don't know what tax bracket all of y'all are in, but I can tell you $500,000 tax free is good stuff. Hey, Michelle McLean, how are you? John, can you help me in Florida? No, I cannot, John. I could, but we don't. If David Cribbs is on here, David Cribbs, if you could make a recommendation for a mortgage broker in Florida, that would be great. One that you trust, because I trust you. Again, so this is not about Lisa trying to get loans, because I will get loans. And if you know somebody in Texas, I would love to work with them, or my company would, I should say. We'd love to work with them and help them. But this is really about me getting out information. And for those of you just tuning in, this is just me talking about the effects of the coronavirus, the absolute psychoness of the stock market, up, down, all around, da 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 da. And, the Dow had the single largest drop in history, falling 1,191 points on Thursday. But probably why that made it so scary is because 2 weeks earlier, it hit a record high. So what do? It's like, whoa, 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 whoa. But a world pandemic does scare the markets, and they don't give a damn if we're going to die, y'all. They're not scared that we're all going to be sick. That's not the case. They're worried about the uncertainty for business, for travel, for manufacturing. China is like, let's be real. Like, even the auto industry is seeing it. Now, I did. And when I saw that 0.5 point cut to the Fed, I was happy for all my car dealers, because that means they had a drop in their floor plan rate. So that's a good thing. See, so out of every dark cloud, you can find a silver lining. And the silver lining here is wash your hands. Don't go to China, India, Italy, or Japan, right? Stay off of a cruise ship. I was at Target today. I grabbed the wipe. I disinfected it. Right? I mean, be smart, and chances are we're not going to contract the coronavirus, but why don't we ride this pony, right? Why don't we ride this pony? Now might be a time, and I'm not a stockbroker, so this is not stock advice, but now might be the time to talk to your financial person and buy some stocks, especially oil stocks. Just saying. And whatever, because the company's stocks are not failing, but they're taking a dip right now. So it's a time to buy stock. It's a time to refinance your house. It's a time to renegotiate your credit card rates, because those are things that the Fed rate is tied to, right? Credit card rates. So it is tied to short-term lending. Okay. It is not tied to 10-year treasuries, which is what governs the mortgage industry, which is considered long-term debt. Okay. Let's just say you got a house out there, and you want to sell it. It's like, oh my God, you've been wanting to move for 5 years, and now it's time to sell your house maybe. And now you're thinking, well, I don't have to worry about that 3.5% interest rate. It's a funny story, but James and I talked, I keep telling him we need to dump it. We live in a nice house, big house, but our kids are gone. It's like, we don't need all this space. And my whole time I'm like, but we got such a good rate, owning a mortgage company, you always have the best rates. But how could we replace that rate? Well, now we can. I know if my mother's watching, we're not moving, but it's definitely a thought process now for more reasons than one. And, supply, demand, especially sitting here in Austin, Texas. So like, if you're on the fence about selling your house, now's the time to do it, because if you can find another house, supply and demand, then you can get that low rate on that too. So I think that this is going to free up a lot of the gridlock that we're seeing in some major markets like Austin, Texas, where we don't have enough houses for the demand of people wanting to move. The numbers are staggering. We sold 1,700 last month, and only 1,200 went on the market. I'm just making those numbers up, but it was that kind of ratio of more people are buying houses than putting them back on the markets, right? So we're not replacing the ones that are selling. So it's causing this crazy supply and demand, which is just doing this to our prices, right? Which again, if you're a homeowner like myself, to see the kind of gains that we have are unbelievable, but are they sustainable? I don't know, because everything, supply and demand is what drives everything, right? Hey, John, how are you? Oh, good. David Cribbs. Okay. Thank you, David, for putting one out there. To Stephanie at Florida Mortgage, thank you. Again, feel free to contact me. You guys know how to get a hold of me. You can DM me. You could do whatever, but we have a real opportunity in front of us. Like I said, don't go out there and get sick. Stay off a cruise ship. Don't go to China. What is it? South Korea, Italy, Japan, and Iran. So stay out of those countries. Stay off cruise ships. And and nursing homes, I guess, from what I'm hearing. And other than that, chances are you're going to be fine, right? You're going to be fine. You're not going to contract the coronavirus. Again, I'm not a health official, but it's not going to happen. So take advantage of what's going on in the market right now. Don't live in fear. Don't be afraid to go out and go shopping. With that Fed rate drop, right? Again, the US economy is 75% consumer spending. So they did that so we wouldn't quit spending, so we wouldn't stop spending money, right? So continue to shop, go out in public, wipe down everything before you get in it. I know my dear friend Melissa Burrows going to Disney World in a few days, and she's not worried about it. She's just going to take extra precautions. I'm going to be in Chicago and New York this month speaking, and I'm not worried. I'm just going to be careful. And I hope everyone out there is doing great. I really want you to go and look at your loans. I want you to go share this. I want you to tell your friends. And I've got a lot of people I can refer you to around the country when it comes to mortgage brokers. 20 years in business, we've built up a really great network of professionals. But what you don't want to do is go to the company that just is a flash in the pan, that has not been in business for very long. The big 1-800 Rocket Mortgage, all those, forget about them. It'll be a nightmare. I can't tell you how many loans we have to save out of there because it's a disaster. Work locally, deal locally, be an informed consumer. Rates are not going to hit 2% most likely, so don't fall for that. But use it to leverage your greatest financial tool, which is your home. Your greatest financial asset for most people is your home, and get yourself into a really strong position. You can skip a payment when you refinance, and sometimes, depending on how you time it, you can skip 2. We don't sell that part, just 1 for sure, right? 2 if you're super lucky, and whatever. And please feel free to reach out to me, send me a direct message, do whatever. I'm here to be a resource. I'm here to serve. I'm here to help y'all. If you want to do business with us, yay, yippee. But again, all you guys and gals that are on here, you're from all over the country, but I've got a huge referral source, and I'd be happy to refer you out to many of my colleagues around the country who are really good companies, who have been in business a really long time. They're pros. They know what to do. But take advantage of it. Like, this is like our moment in time that we can just really get ourselves into a really strong financial position on our mortgages. So let me see if there's any more questions out there. Oh, here we go. Here's one. It just says Facebook user. I'm sorry, because we're going out on so many different pages. I got the MI dropped off countrywide, sold our loan to Bank of America. Oh, I'm already afraid. I called Bank of America and asked for the MIP to be dropped off. They asked me to look at my paperwork because I signed for it. I told them to show me the paper. I signed it. And after a couple of weeks, they sent me an email saying they couldn't locate it and they were taking it off. I wish I knew who you were, Facebook user. You're probably coming off of one of my other pages. Good. It's just a nightmare dealing with the large institutions. Let us do that for you, right? We deal with large institutions. And that's part of what we do as a broker, is that we take that onus off of you. We deal with you one-on-one. We put your loan at the best place, at the best pricing, that's the best for you. And then we deal with the BS on the back end. You don't need to be doing that. You're busy people. All of you've got jobs, you're entrepreneurs, whatever. You don't need to do it. Thanks for validating why I shouldn't refinance under 100 grand. Yeah. Oh, it's Twa. Hi, Twa. Twa Rivers, one of my favorite customers ever. Clients. She bought Fiats from me. Yes. And yeah, you're welcome on the under $100,000. It's not worth it. It's just not worth it. The recoup under $100,000, it's not there. We've had a couple clients, old clients of ours 15 years ago. They reached out to me and I'm like, I don't want to take your money. I don't see a financial gain, because you're really in the home stretch when you owe under $100,000. What else? Who else is out there? What other questions do we have? I see a bunch of you have been on here, but anyways, share this out. Lisa@lisacopeland.com. Shoot me an email. If you've got any questions, I'd be happy to look at something. But a great way to find out who you're doing business with is go to the Better Business Bureau, the BBB.org, and find out how long they've been licensed with the BBB. Like we've been, I think, licensed 18 years. We've been in business 20, but I don't think I bought the membership thing, whatever, until 2004 or something like that. But anyways, go and see if there've been complaints. Go and look on Yelp, go look on Google, go see who you're doing business with. And because right now there's going to be a bunch of sharks that jump into the water. They're just going to. You know, everyone's smelling blood. There's a lot of money to be made if you're in the mortgage industry right now. And so all the sharks are going to jump into the water. And I don't want to see you all get taken advantage of. And really, the way you'll be taken advantage of is that they will not have the oomph to get the loan to the closing table. They won't have the long-term relationship. You know, our processing team has been with us for over 20 years. We have dealt with the same investors for over 20 years. When we pick up the phone, they answer. When we tell our processing team is amazing, and our loans close. And again, this is not a commercial because most of you can't do business with us anyways, but those are the questions you want to ask. How long has your processor been with you? How long have you been in the business? How long has your company been in business? What is your Better Business Bureau rating? What is your Google rating? You know, ask the questions. Or you will do a lot of paperwork. You will sit in some queue somewhere and they will not push your loan to the finish line. You will never close your refinance. I mean, hundreds of loans over the years we have gotten because people call us and they go, oh my God, you're not going to believe what we have been through with XYZ, big bank, mortgage, blah, blah. I'm like, oh, I believe it. We deal with it all the time. I get it. Because you're dealing with somebody who is sitting in a phone room churning loans. And, you know, they're not the business owner. They're not the ones that are out there that have to deal with you. So anyways, that is my big buyer beware out there. All right, everybody, I have got to go back to work. It's crazy, cray, but it's all good in the hood. So I hope everyone's doing great. I hope you have a fantastic weekend. I hope you got your hand sanitizer and, you know, and you don't sit and stress out about getting the coronavirus because, you know, I don't think it's going to happen, but it's an issue. I'm not trying to be insensitive to it, but take advantage of the good parts of the corona, right? All right. Bye, everybody.